Welcome back to another episode of the Blockburner Podcast. I'm your host, William, always here with your co-host, Iman.
What's going on, dude?
And on the sticks, we got TJ.
Hello.
And joining us today, finally, we got Bob Burnett, founder and CEO of Barefoot Mining. Thank you for joining us, Bob.
Great to be with you, gentlemen. I enjoyed our little talk beforehand because I didn't get a chance to tell you, but we actually both have our roots in Ethereum.
Oh, excellent.
And I can tell you that story in a little bit. But
well, sure. Typically, that's how we get started, right? It's like where do your roots lie, right?
Yeah.
Because we've talked to a lot of different developers in the context of like the ordinals ecosystem, and a lot of these guys have backgrounds, for sure, like more like I don't know, like Bitcoin, BSV,
yeah,
other chains like neighboring to Bitcoin that had like some sort of development capacity, right? But when it comes to like the Bitcoin miners, we've only talked to, I think, one so far, CB Spears, which I think he's like,
okay.
Yeah. So we definitely need a deeper context as far as how everything works. But yeah, if you can give us your full scope of background, like how you got into this madhouse that we call crypto, right? The crypto industry.
Yeah. Well, what happened was we actually have to go way back. So those of you watching can see I'm a little older member of the community. And so my roots go way back into the very early days of personal computing, really into the late 70s and early 80s. And so I spent most of my first career, I guess maybe we could call that, in the personal computer space. And most notably, the short version of the story, I eventually became the chief technical officer of a company called Gateway, which was one of the biggest PC companies in the world in the 90s and the 2000s. Mm-hmm. We were a Fortune 200 company. For the younger members, we were a Fortune 200 company. We're making about 10 million PCs a year in that time period. And I left there in the mid 2000s, did a technology incubator on the heels of that. And kind of fast forwarding through that, in 2017, then one day I got a call from an old acquaintance of mine at Gateway. And he said, "Hey, Bob, I'm trying to build an Ethereum mining farm. And I can't get the GPUs and I can't get a professionally designed system." So in that time period, Ethereum was dominated by GPU mining. And it was, like I said, it was in its infancy. Most of the equipment was home built that people were mining with at that time. And he wanted to have like 800 of these things. Mm-hmm. So thinking about things as a computer guy, I was able to put together a system design for him. A little bit of history: Gateway was the first company to give NVIDIA a chance. So when NVIDIA was a startup company in the early 90s, we were the first company to design their chip, and I was part of that team. And so we were able to get what at the time were very difficult to secure GPUs from NVIDIA. So I got into the business that way by fulfilling that order. We got a big order. It was like a $6 million order, and we did that. We fulfilled the order. And then I started to talk to other people and say, "Hey, would you like to buy one of these?" And several people started to say yes, but almost everybody that said yes said, "I'll only buy them if you host it for me as well." Mm. So that meant we had an open in order to sell the Ethereum mining servers, we had to open a business to host the computers as well. And then we started to see that they were making a lot of money for the clients that we were doing this for. So we started taking the profits from those and pouring them into our own equipment. So after about a year or so, though, I started to really look seriously at Ethereum itself. And I have a technical background. My degree's in computer engineering. I've done a lot of work in operating system design and firmware design and big software projects. I started to look at the way that Ethereum was constructed, and I started to see a lot of warts. I saw a project that was too complex. I saw a project that was really led by a very small group of people in the Ethereum Foundation, primarily Vitalik.
Mm-hmm.
It didn't really fulfill a lot of the decentralization and like those sort of things. And then I saw the decision to move away from proof of work toward proof of stake. And in examining proof of stake, I realized I did not have faith in it as a consensus protocol.
Mm-hmm.
So that forced me to look at Bitcoin. And it was at that point that I started digging into Bitcoin and realized that I really need to be mining Bitcoin, not mining Ethereum. And so we pivoted. And, for the last, I'd say 5 years, we've been pretty much pure in our pursuit of Bitcoin related things. And I've got a lot of other projects now, my fingers in a lot of other things, including I'm on the board of directors at Ocean,
Mm-hmm.
which is a mining pool. I have a small fund that I manage of investments across the entire Bitcoin ecosystem. Got my own show called Old Man Yells. So, and I'm at a point in my life at 60 where for me, it's not about, I'm not doing this first and foremost for money. I have no problem making money, but I'm here because I believe Bitcoin is the future of money,
Mm-hmm.
and that the world has a very broken monetary system, and that the world my grandkids, I have 5 grandkids already, the world they grow up in is going to have its best chance at being kind to them if we have a better monetary system. So, that kind of drives me on a daily basis to do what I do.
Yeah, congratulations on the grandkids. First of all, and we share your sentiment on like the broken fiat system, and we learned how the fiat system worked pretty early on. Just the fact that it kind of you print money out of thin air. It's like, how does this make any sense? And as soon as we discovered cryptocurrency, we sort of just delved deep into it. And I'm curious, how early did you get into the Ethereum ecosystem? What year was that?
2017.
2017. Okay, so then you got to see the mania of the NFTs and DeFi
sure.
and all that stuff. So
Yeah.
same with us. I mean, professionally, we got into cryptocurrency in 2019 with a podcast, and then we started developing our own applications on Ethereum, and then we went to Bitcoin and all that stuff. So we definitely have a background in development and all that stuff. And we've been following cryptocurrency since 2016, 2017 timeframe as well. So we've seen all the ups and downs, and ultimately, you have a similar story to us, Ethereum, then to Bitcoin. And like, it seems like, all roads lead back to Bitcoin, and all of a sudden, all the countries, including the United States, they have an interest in Bitcoin thanks to Donald Trump, and the previous administration hasn't been too kind to Bitcoin at all. So I guess one of the questions is, how has the change in administration affected specifically your business? And I want to go into Barefoot Mining and exactly what they do as well.
Sure. Well, you're right that this administration is a lot more friendly than the other one. That said, I think we have to be careful. One of the things I do a lot of speaking, and one of the things I'll say is that, for me, we have the opportunity to build a monetary system to last for 1,000 years. And it is a beautifully designed architecture, but if it's mistreated, if it's used improperly, if it isn't cared for, if it isn't defended, then it is still exposed. Like it's not invincible, is what I'm trying to say.
Mm-hmm.
And one of the things that is positive about the previous administration, the Biden administration, is I felt like the community was on guard. Like, we knew that we were threatened, and therefore, we were ready to fight. And now with the Trump administration, which is friendlier, one of the things that bothers me about it is that I'm seeing a lot of people think, oh, we're safe now. Like, well, no, we're not we're not safe. Things could change on a dime, either within the Trump administration or the next administration, and we have to stay vigilant. And it's kind of like if you live in a place where you feel so safe that you don't even lock your front door, like, in other words, it's when you are most comfortable that you're the most exposed.
Yeah, vulnerable.
That said, the Biden administration, and I'll speak especially toward mining, was very, very adversarial. And I'll tell you two things about that. The first was, what a lot of people don't realize is that the Biden administration twice, both in the 2023 budget and the 2024 budget, tried to pass a 30% tax on electricity consumption for Bitcoin mining in America. They were very, very vigilant about that. They also have been were behind several reports that were just blatantly false about things like how much energy does the network use, how green is the network, how it stresses the grid. I mean, just frankly, out and out lies. And they knew that they were lies, and they were using data from sources that had been widely disregarded, most of them backed by the World Economic Foundation. So they were really a pain in the ass. I was at a meeting once in Texas, a small meeting of CEOs of mining companies. We had a little gathering in Texas one day, and Senator Cruz came to speak to us. So we were in a room. I think there were maybe 12 of us sitting in the room, and Senator Cruz came in, closed the door behind him, started taking his sport coat off. And I remember the very first thing he said, this administration, meaning the Biden administration, hates you guys more than anybody else in the country. Like he was very, very upfront about the attack that they were, and the vitriol that they had toward us.
Did you understand why they had this amount of hate? Is it because Bitcoin challenges the fiat system?
Ultimately, yes, it does. Ultimately, I think that is the reason. They fly under the radar of climate change. That's the thing that they like to. So by the way, which in and of itself isn't even. I mean, I'm not going to use this platform to say whether climate change is real or not. Although I will say I'm not a big believer that man is causing climate change. But even if it is, Bitcoin mining is not at the root of it. We use 0.6% of the world's electricity today, and we are the greenest industry in the world. So by any measure, we're a trivial amount of the world's electricity consumption, and we are the greenest industry in the world. So whether we are or we aren't isn't there. But fundamentally, that is the problem. In October of this year, if you get to the root cause, the Minneapolis Fed published a white paper. And the white paper was a very well-written document. And it created a mathematical proof that in the long run, the existence of Bitcoin makes it impossible for the country to run a budget deficit, meaning the country must have a balanced budget or a budget surplus, meaning you can't, this is another way of saying, if Bitcoin exists, the government can't print money in the long run. And it was a beautifully written proof. What was interesting about it was their perspective, though, was this is a horrible thing. Like that Bitcoin forcing fiscal responsibility on the politicians of the country was a bad thing, and that they needed the flexibility to be able to run deficits in order to run the country. So it's interesting because, like I said, I'm in violent agreement with them on the conclusion of the paper. I just believe it's a good thing, not a bad thing.
Mm-hmm.
So is this something that, I mean, so they must have come to this like understanding or forecasting, I guess, internally, in order for like the previous administration to have this level of vitriolic attempt over time, even though they might be masquerading it with like, you know, I guess more publicly agreeable narratives like, hey,
Like we're consuming too much energy.
yeah, even though like you're saying the
Yeah.
data doesn't justify that type of reaction, but so there's something internal that they're not discussing, right? Because then you gotta like bring the real elephant in the room of like, you know,
We can print out of thin air.
yeah, you don't want that to be like the real centerpiece topic of discussion, right? So that has to be it, right? So, So then this new administration, like, how are they?
Yeah, how do you interpret their interpretation of Bitcoin?
Such a radical pivot.
Yeah,
you know.
Well, I think the first thing was they read the room right.
Mm-hmm.
So they're politicians, right? They read the room and said, hey, we can either disenfranchise and ostracize these tens of millions of people, or we can have them on our side. And so I think that's where that starts from. Like, hey, they realize that that's the case. I think the second level is there are some within the administration and providing advice to the administration that are starting to understand that it can be a tool to help them. And then there's kind of a third level, which is I think some of them realize that it presents lack of participation, also presents some existential risk. So that's kind of the third level. And the fourth level, which maybe can come back to because it's a deeper topic, is that the mining at the end of the day may be even the most important part. Even more, I'll say this, and then I can fill in this a little bit later, but I'll say this. In my opinion, it is more important for a country to control a reasonable percentage of the block creation of Bitcoin than it is for them to own Bitcoin. That the fate of the nation will be determined by their ability to control blocks more than owning Bitcoin.
Why is that?
And I don't think they have figured that part out yet, but they will.
Yeah, what's your take on why having a percentage of hash power more important than holding Bitcoin? Like why the hash power over Bitcoin?
All right. Well, so I'm going to first, I'm going to rephrase your question just slightly.
Sure.
So I want to be, this is where some semantics get really important. Mm-hmm. What I actually said was controlling block space, not hash power. There's a distinction. Okay.
Okay.
So, there's what the community has gotten a bit off base a bit. Okay. Hashing is one component of mining, but it is a hasher is not a miner. So in order to be a miner, you must run a node, you must create the block template, you must receive direct Coinbase transactions, and you must hash. Now, most of the people that say they are miners or companies that say they are miners are really hashers. So the template creation, the block, the receiving of the Coinbase transaction,
I see.
The running of the nodes is done by the pools, and that's a very bad thing, by the way. We have gotten to the point where Foundry has, depending on a given point in time, they have 30% to 40% of the block template creation. Maybe to back up a little bit to articulate why this is so important, we need to talk about the base layer just a little bit.
Sure.
Okay. So I think everybody that's done a little bit of Bitcoin research understands that blocks come in on average every 10 minutes. Mm-hmm. Those blocks have a finite size of 4 million weight units. Okay. And on average, recently, for the last 2.5 years, they've all been full. Like we're like at 99% block utilization over the last 2.5 years. The average number of transactions in those blocks is about 3,000. If you take the 10-minute block time on average and extrapolate that for a year, there's about 53,000 blocks a year processed by the network. Mm-hmm. Times 3,000 transactions per block, that gets you about 160 million transactions available on the base layer. Now, we don't utilize the most efficient transaction structure typically as a community. So I think that number could get stretched to 200 to 250 million.
Okay.
But it can't go beyond that. That's what we have in terms of base layers. We have 8 billion people in the world. We have 330 million companies in the world. We have 200 nation states in the world. And ultimately, they have to share, well, let's use the number 200 million base layer transactions annually. Mm-hmm, mm-hmm. So what the math says is that this is a phenomenally scarce resource. And I think it's best looked at, block space is best looked at as a commodity. Mm-hmm. And most people would say the product of the mining operation is Bitcoin. But and that probably was true in the early days, but I think we've pivoted now. The product of the mining operation going forward is block space. So what we do as miners, what my company does and the rest of us that are participating in the ecosystem doing is we're producing blocks. And so now, if we fast forward to some point in time, 10 years from now, 15 years from now, 20 years from now, and you say, well, the world has at least started the hyper-Bitcoinization. Mm-hmm. We have thousands, tens of thousands of companies having it in corporate treasury. We have tens of millions of individuals who own Bitcoin. We have international commerce occurring with Bitcoin on a regular basis. Well, that 200 million transactions gets gobbled up really quickly. And so it will become, in my opinion, very difficult for the average person to interact with the base layer. Mm-hmm. And block space itself is going to be super, super crowded. Because you guys may well be aware of this. I talked about over the last 2.5 years, every single block is already full. Mm-hmm. Well, for the most part, the mempool has been stuffed that entire period. It's cleared recently, right? But for the most part, it's been stuffed the last 2.5 years too. Well, we're still in the early stages of the adoption. So how big is the demand going to get? How crowded will that block space be? Well, I think it's going to get to the point where, for instance, I think the biggest mining companies in the world are going to be financial institutions. Mm-hmm. It's not going to be companies like Riot or Marathon. It's going to be companies like Wells Fargo or Deutsche Bank. But I don't even necessarily like this, but this is what I think will happen. And I think the reason that it will happen is that in a world where Bitcoin becomes a major piece of the global economic system, those companies are going to have to offer Bitcoin services in order to attract big clients. So if you're Tesla or General Motors or Pepsi or some big company, for Wells Fargo to attract you as a customer, I think they are going to have to offer block space to you as a service. And so then the only way they could do that is, let's say in the case of Wells Fargo, If Wells Fargo owned 1.5% of the world's hash rate and created 1.5% of the world's blocks, that means that every week they would make a decision about roughly 5 blocks. And so they can go to their customer base and say, hey, in this world where block space is hard to get and very precious, we are going to offer you access maybe for free or for a fixed rate, not the variable rate like we have in the market today.
So Bob, I want to dig a little bit deeper into this. So earlier you mentioned that you separated hash power versus block space. So I'm curious, in the example of Pepsi, when they're offering block space, how do you separate those two when you just mentioned like Pepsi would have, in this example, 1% of the hash power. So how do you provide block space without providing the ability to hash that block space?
Oh no! So what I'm maybe I misspoke or maybe you misunderstood. What I was saying was, let's say Wells Fargo, a big bank, wants to attract Pepsi as a customer.
Okay.
They want all of the banking services, both on the fiat side and the Bitcoin side, running through Wells Fargo.
Okay.
What I'm saying is Wells Fargo would set up a mining operation where they would control 1/2 of the world's hash rate, and they wouldn't use a pool. They would solo mine.
Okay.
And create 5 blocks a week themselves.
Sure.
And that would give them roughly 20,000 transactions a week.
Yeah, that makes sense.
Where they could at least offer preferential access to their customers. And then if they had needs beyond that, they could go to the open market and fill in with the highest fees after that. But I think we're going to live in a world where block space is often spoken for way ahead of time. Mm-hmm. I'm actually working on another product with a company called Block Spaces, and we will be offering what are called block space forward contracts. So the idea would be, even like my company, Barefoot Mining, which we're not a financial institution, but the idea is we could sit here in March and let's just say, to keep the math simple, we control 1% of the world's hash rate.
Sure.
Well, what we could do is we know that on average, we're going to generate 1.5 blocks a day. And so what we could do now is there could be a customer out there that knew that they needed to do a lot of on-chain activity in, let's say, October. Mm-hmm. I could agree with them right now and say, hey, I am willing to sell you access to a block at 10 sats per VByte now. And for the first week of October, just as an example. Sure. So they could go in and we could agree on a price, and I could guarantee them space for the first week of October. It's really no different than any other commodity market. If you think of block space as a commodity, mm-hmm. If I'm a farmer is sitting here in March in Missouri, maybe I'm going to plow my fields, and the next 4 weeks, I'm going to plant some seed corn, and I might start selling the expected September and October harvest now. Mm-hmm. It's really the same with a mining operation. Sure. That I know mathematically in a given window of time, kind of how much block space I'm going to produce in the future, so I can pre-sell it.
Yeah, and ultimately the underlying commodity that's being moved in these transactions is Bitcoin at the end of the day. So where does Bitcoin, in the scenario where we have Wells Fargo as a miner, which would be kind of like a big deal, right? We have huge banking institutions mining Bitcoin, or at least adding blocks to the chain, not necessarily mining Bitcoin post 2140, right? So in that scenario where we have these banking institutions, adding this service, right? Where does Bitcoin lie in this scenario? Is this like one of the most valuable assets ever conceived, or are we talking, you know, like what's the interpretation of banks in the context of Bitcoin in this scenario?
Well, I would say the simple answer is yes, it is one of the most valuable assets of all time. However, if you look at the existing banking system, okay, there's the money. Well, there's the money. If you look at banking, there's the money itself, the asset, and there is the system. And you can't be a bank without access to the system. Like, and that's a highly regulated and controlled thing, right? Like FedWire and the SWIFT system and those sort of things are highly regulated pieces. So I think these organizations are going to realize that they need to be participating not just in things like the custody of Bitcoin, but in the actual management of the network itself. They have to be connected. They have to provide those services. And I would extend that same thing now to the nation state. So let's use a country like Israel. Okay. So country Israel. So obviously I don't mean to cause political controversy, but let's say, I think one thing everybody could agree about with Israel, it's a very controversial country, and that political winds blow one way or the other. And so if I were the prime minister of Israel right now, what I would be doing is I would be building a mining infrastructure in my country right now. And the reason I would be doing it is that I want to control enough block space that if I am blockaded from the traditional monetary system, that I can always do commerce. Like we did that to Russia, right? The US or the West, the West did that to Russia. And by the way, Russia has been very public. They are now buying and selling goods in Bitcoin. Yep. Like the foreign trade minister there has said they are selling oil for Bitcoin and they are buying other goods with Bitcoin to get around all the sanctions. That's already happening. So I think this is where we're going. By the way, I don't love this. I want to be clear. I just think this is how the game theory plays out, that we can't, Bitcoin and even the whole crypto community, we're pretty much anti banks and governments and big businesses. Like they've effed everything up for quite a while. So part of the reason I talk about this stuff is to say, hey, these guys are coming. Like we can't expect that we have a $2 trillion asset that, this thing that's growing with massive network effect and them not notice it and want to participate. They are going to. And like, I'll give you guys an example. Do you guys, Bank of America, I looked at their last year's financial statement. Their IT budget was $11 billion last year. That's one big bank. The entire revenue for the whole mining industry globally last year, revenue was about 13 billion. So the revenue of the entire Bitcoin mining industry was roughly equivalent to the IT budget of just one of the big banks. So I think they will get into mining and they'll look at it more as a cost of doing business. They won't do it so much because they want to get a bunch of Bitcoin and mine a bunch of Bitcoin. They'll do it because they need to stay in control. They need to stay in the game. And I think the same thing at the nation state. And I see, Will, over your left shoulder, the software book. And I think some of what I talk about, it overlaps a little bit with what Jason Lowry talks about. We come at it from different angles. I come about it from an economic sovereignty perspective, and he comes about it from a DOD projection of force, all that sort of thing. But I think the conclusion is the same. In fact, I just had a really interesting Twitter banter yesterday with a group of people, because what I said was, I said, I'm quite confident that the CIA and the NSA, as examples, are active in mining already. And if they're not, they will be really, really soon. And the reason is that when you create the blocks and you get paid from the Coinbase transaction, and by the way, I don't want to, would everybody be clear about what the Coinbase transaction is?
Sure. Yeah.
Within your community?
Yeah. Earning Bitcoin. Okay. Correct. Yes.
But, it's so, and the Coinbase transaction has no history to it. So imagine this. I'll just give you an example. Mm-hmm. You're the CIA. You want to get money to some organization in Central Asia that is rebelling against their government there. And you need to get them untraceable money. Well, the very best way to do that would be for the CIA to solo mine a block, or they could use Ocean, which I'm associated with. Mm-hmm. They would get a payment directly to an address from the Coinbase transaction, meaning it was not it's not a transaction initiated by the spies. It comes directly from the Bitcoin organization to an address that can then be grabbed by this organization in Central Asia. So it is the most untraceable transaction.
So Bob,
that anybody could create.
Not to interrupt, I just had a interesting question. So are you saying that you can assign a different Bitcoin address? Let's say, this country in Africa that you want to send 3.125 Bitcoin. You can assign that Coinbase, like you're mining that block. You can assign the Coinbase to whichever wallet you want, just like.
Correct. I can parse it too. It doesn't have to be, I can just, and remember the fees are in there too. And those are all, right. So let's say it was 3.5 total, just as an example.
Sure.
I could parse that into 40 or 60 different outputs.
I see. Okay. You could do that in real time. So, that's interesting.
Yeah. So it's what happens today is, again, it's because of the pools, the way the pools are structured today. Let's say Foundry, they set the Coinbase transaction just with a single output to go to them. Mm-hmm. And then they theoretically disperse the money after that to the miners, right? Mm-hmm. But you don't have to do it that way. You can, if you look at a block that Ocean wins, what you'll see is you'll see 60 or 70 different outputs in the Coinbase transaction.
Right. Okay.
And so that would be the ideal way it is the most private transaction on any chain anywhere. Yeah, like that particular one. It is untraceable, and virgin Bitcoin. I can tell you, by the way, too, like even for us as a miner, and we get this virgin Bitcoin, we do have private organizations that approach us that want virgin Bitcoin. Mm-hmm, mm-hmm. And they'll sometimes pay a 2 to 5% premium over market price at a given point in time to get that.
That is super interesting. I hadn't thought about that scenario, but I can see that actually working. And it only works until there's a Coinbase, right? At one point, there isn't going to be a Coinbase, but
no, there will always be a Coinbase. Well, it's just the fees are part of that too.
Yeah.
So what happens is, like when we hit 2140 and the subsidy is all gone,
right?
The fees that are in the block from, let's say there were 4,000 transactions, right, and there was a half of a Bitcoin in fees. Mm-hmm. You could think of it as those are recycled and sent back into the system as virgin Bitcoin again. So there's no UTXO history to any of that.
Yeah, that's so true. So in 2140, when today, Bitcoin is starting to gain traction as the store of values, simply because the United States, Trump, we're sort of recognizing it as that it has that potential. What is the incentive for? I guess what you're saying is ultimately miners post 2140 are not incentivized to mine Bitcoin because of fees, but because of the network controlling aspect of being able to send transactions in the first place. Is that correct?
Everything is correct except for the time. I'm saying that when I gave the Wells Fargo example, or I give the Israel example, I'm saying that's relevant probably in the next couple of years, that miners are already the subsidy becomes secondary to the control of block space. Let's say within this decade.
Right. Yeah, that's a kind of interesting because so today the store of value narrative is pretty dominant, and that's how I guess retail can see the value of Bitcoin at that point. What is the narrative that goes beyond the store of value that makes it, attractive for like the everyday person, rather than like from the country's perspective? It makes sense that they want to become a miner and they want to be able to make transactions pretty much at will because they hold a percentage of hash power. But what about the end user and holding Bitcoins? Like what is their like understanding? How do they interpret the value of Bitcoin when you have this cyber warfare happening where it's about amassing hash power to be able to make transactions in the first place?
Well, the first thing, it's a really good question, but I think the first thing is that, remember when I was talking about kind of protecting Bitcoin and protecting the ecosystem? Part of the reason I come and I like to talk to guys like you about this stuff is to create awareness that the landscape that we're living in today, I think, will radically change, like who is mining. But there's still plenty of space for plebs and for what I call ethos-centric organizations, Bitcoin ethos-centric organizations, to participate in mining. And I wrote an article a few years ago for Bitcoin Magazine. It's called Satoshi's Heel. And it talks about the danger of the world in which only large organizations mine. What happens. And what I prove mathematically, I believe in the article, is that if we have at least 15, but hopefully 30% of the world with, like I said, they're plebs or they're ethos-centric organizations, then we can preserve enough integrity in the network itself that the network can still operate in its present form, which I would say, to answer your question, is it's borderless, it's censorship resistant.
Okay.
It's immutable. I think those are really important characteristics. My wife was from the Philippines, and we live in the U.S. now. And she's been gone for a while, but she still has a tremendous amount of family there, and we often have to send money back to the Philippines to help different people within our family there. And historically, we would use Western Union or bank wires or things like that. And it was just a horrible experience. A lot of times the transaction wouldn't go through. There'd be some sort of banker somewhere in the process that would, block the money. Even if it got through, we were losing 15% or so of the value of the transaction in that. Now we don't have to do that anymore. We don't, we just send them what they need. They get it on the other end, and off they go. We use Bitcoin for that. We can also use Tether or something like that occasionally too. But that's what Bitcoin provides. Is it provides that ability to have permissionless, borderless, and again immutable money. So part of the thing I love is like this is a BitAxe, right here. You guys familiar with the?
No, we're not. BitAxe.
Oh, okay. So this is a tiny little mining. It's not super powerful, but it costs about $180, and it's a small miner that anybody can buy and run in their home. I think it consumes about 30 watts.
Okay.
So it's not a big deal. And it allows you to participate in the network, and you can either hash with it, direct it to a pool, or you can do full mining with it if you want to, add a node and add what's called a datum server to it. Mm-hmm. But I'm hoping, I don't have any financial interest in it, but what I'm hoping is tens of millions of people eventually have devices like this to fight against the inevitable percentage of the network that's controlled by these big banks, right? So, I know you guys enough to think, well, you're ethos minded people who would want the best for Bitcoin. You're not reporting up to a corporate boardroom,
right?
So that's what's important, I think, is preserving that, so those individuals still have that value proposition of this. And if we don't diversify the mining ecosystem properly, then we have a problem.
Yeah, 100%.
Yeah, because in the current day state of it, what is it, like 3 or 4 miners essentially?
Yeah.
Dominate pretty significantly. It's definitely above 50%, right?
Yeah, it's Foundry.
Yeah, well, the top two, Ant Pool and Foundry would be 50-ish. And then you add the next 4 or so and you get an 85, 90.
Okay.
And that's not good.
Yeah.
That's not good at all.
Yeah. So how come it's more likely for the financial institutions or nation states to kind of usher in this control over the network, as opposed to who's already kind of what appears to be in control, at least as far as hash dominance, right? How come they wouldn't kind of initiate this sooner rather than later?
I think they have different incentives. I think that the mining ecosystem as it exists today is primarily motivated by the block reward, the subsidy and the fees that come from it. But the future state ultimately lands with a group of organizations that are much more motivated by the control and power that come from controlling the block space. And I think that's the change. Mm-hmm. So I'm very confident in that. I think that there's plenty of arguments to be made about whether or not my prediction of, that we see this start to emerge this decade, could be argued by somebody who says, oh no, that won't happen for 20 more years. I think that is debatable. And I can respect somebody who wants to take the opposite side of that position. But I don't think the inevitability of it is in question unless Bitcoin fails, right? Unless Bitcoin, but if Bitcoin continues to grow, it's inevitable. There's just no way that, and certainly the trend, what we've seen in terms of nation state adoption, we see BlackRock's involved in Bitcoin now. By the way, Fidelity has been mining for 10 years. I mean,
really?
Yeah. So they got it really early. So not unknown to a lot of people, but Fidelity's already in the game and mining hard.
Wow.
So sooner rather than later, because right now, you're a today miner, so you understand the economic incentives of, the Bitcoin subsidy is that main attracting point to partake. Yep. Or, majorities, at least that's the majority perception, right? Maybe there's a smaller percentage where, it's more ethos alignment. Like you're saying, you really believe in these tenets and you think the world would be better off based on, a Bitcoin monetary system as opposed to a fiat one, right? So that's part of the pool of participants as well. But what you're saying is over time, explain to me the miner perspective of there is a built-in diminishing of this subsidy. So kind of naturally this is going to happen anyways, right? Where, the subsidy gets cut in half every 4 years. So there's already a built-in pressure for you guys to kind of adjust to that, whether that's developing new business models to sustain revenue for your operations and stuff. Kind of tell us what it's like, the life of a miner.
Yeah, how do you adjust to every 4 years the subsidy?
Yeah, because I can imagine you guys. I would be sweating bullets every time Bitcoin is about to have, right?
Well, yeah, it's not for the faint of heart, that's for sure. Yeah, well, mining ultimately it's a weird business, right? We have no customers. Like, how many businesses have no customers? Like, it's one of the only ones in the world where we serve a network, and no matter, like, it's not like if we do a great job of customer service or we have great pricing, then we get more customers. And if we suck, we lose customers. It's like, hey, you're either mining blocks or you're not. Like, and mathematically, it's very predictable. But anyway, so the three factors are the price of Bitcoin, the fee structure, and the global hash rate. Okay. And we don't control any of them. We can only try to predict them, right? So like, I'm in the question you asked is, if I'm sitting here right now saying, well, if I have to, let's say, put a couple $1 million in to build out my next facility, that's a common number. Like, how do I know what's going to happen? And the answer is I don't. I can only kind of look at bands. I can try to look at kind of the worst case in all of those scenarios, or two of the three being worst case, and say, hey, can I still make it? Can I have the cash flow? The good news is I know when the halving comes. Yeah. So that at least I know that I have a pretty good idea of exactly what day that's going to happen. But yeah, it's very scary. Now, so what you have to do is you have to build knowing that your operational costs are rock bottom. And so, like, what I specialize in at Barefoot Mining is what I call wild mining. So a lot of our current operations and almost all of our future operations are off grid, and we produce our own energy. So we own a hydroelectric facility in South Carolina. We own natural gas wells in Pennsylvania. We have an anaerobic digestion facility in Indiana. That's where we use the basically the cow manure from a dairy farm that then, as it decomposes, we get methane from that feeds generators. So we like to do that sort of stuff. And in those sort of situations, we can have very low cost of energy. So, some cases under 2 cents per kilowatt hour. Wow. Almost always everything is under 4 cents per kilowatt hour. And interestingly, oftentimes our costs are significantly lower than even the biggest guys. So the big guys that go, let's say you want to do 100 megawatts. I like to do 1 or 2 megawatts. They like to do 100 or 200. Well, to do 100 or 200, you have to go on grid. And it's hard to consistently get those low cost energy prices on grid. Plus, you're in what I call a permissioned situation, meaning that even with what's called a PPA, a power purchase agreement, you still have issues with taxation and bureaucrats and all that. When you're off grid, I don't have to worry about that stuff at the same level. So ultimately, what I have to do is I have to say, I have to build these super efficient operations. And I have to know that if the shit hits the fan, that I can be the last man standing. Because the interesting thing is, if the shit hits the fan and let's say the price of Bitcoin dips and the fees dip, right? Like, we're in a really bad situation. Well, then the global hash rate will dip because people have to turn off. So interestingly, if I have if I can be the last one to turn off, then I get more Bitcoin. I get a bigger share of the pie. And the opposite, but the opposite happens to a certain degree. If Bitcoin goes to the moon, fees are real high, the global hash rate comes up. However, the interesting thing about Bitcoin is that if the conditions are bad for mining, people can turn off overnight. Like, you can, like, let's say you're running a miner there in your studio, and suddenly you wake up in the morning and Bitcoin's at $8,000, and you go, well, hell, we're gonna lose our shirt keeping this thing. You turn it off, right? Yeah. But if you wake up tomorrow and it's $300,000 Bitcoin and that machine is super profitable, it's very difficult to go buy a whole bunch of them and get them running. So in other words, the market can respond instantly to a downside, but it takes forever to respond to the upside. And so what happens in mining is you have these periods where, you know, you kind of just chug along. And if you build your operation right, you're profitable, but you're probably just kind of sustaining, like you're just kind of getting by. And then when the price spikes or the fees spike, you have these periods of immense profitability, and then they go away after a little while. But, you know, you can make a tremendous amount of money in these short windows. So that's a lot of what, you know, I've been doing this for a long time now. We've had a couple great runs. Like when the China mining ban happened in mid 2021, the next like 8-9 months, man, that was a freaking bonanza. Anybody mining made a ton of money in that period. And then we had a period last year between January and May, kind of in the run up to the halving, where both the price went up, but the fees went nuts too. You know, and we saw, actually, interestingly, we saw several blocks where the fees were higher than the subsidy.
Yeah.
That was an interesting period, and I think a bit of a foreshadow for what's coming.
It's interesting because I think we were witnessing that I believe was probably corresponding to like runes, most likely.
Yeah.
Mm-hmm.
Yeah. So this is it's an interesting parallel, or like a perspective that we haven't like heard from yet. You know, we've obviously
from the miners' perspective.
Yeah, like us witnessing that happen. It's like, you know, we're happy and interested probably for different reasons. I guess it's like, you know, these things that we're kind of experimenting and tinkering with, like they're showing signs of evidence that, you know, there's legs to this. There's credible reasons to be building on Bitcoin, right?
Right.
Varying different perspectives on that. But from a miner's perspective, that is, I would imagine that's obviously something you would like to see sustain indefinitely, right? Because that is a very good underlying support for your business model, is it not?
Well, yeah. I mean, I want to see the base layer used. I mean, it's there to be used, and I think that in the long run, I don't doubt that it will be used. We went through some of that math before. Like, if there's 200 million transactions a year, and there's 8 billion people, and there's 330 million companies, we'll just look at that. Like, that math doesn't work well. Like, so, the faster that we can get to that point where that fee market steps up, because what I will say this is, like we're only 3 years away now, almost exactly 3 years away from the next halving. It's almost like not too early. You asked this, I'm in. Like, we're almost not too early. Like in my plans, as I'm expanding, we're already in that going, okay, we know that the subsidy drops to 1.56 something there.
Yeah.
And then we're only 7 years away from the subsidy being 0.78 Bitcoin. Like, that's why I, you know, when I talked about like things happening within the next decade, that's part of that story.
Right.
That we kind of, by the early 2030s, we're already in that point where the subsidy is so low. Like, the fee market will be very, very important. But I give this example about block space, and hopefully you guys will like it. But what I say is, pretend I have an apple tree, and it's the only apple tree in the world, and the apple produces 100 apples every day. If the demand for apples in the world is like 98 apples a day, the price of apples is relatively cheap. I'm throwing 2 apples away every day, right? But the moment that there's demand for 101 apples a day, and I only have 100, the price starts going up pretty rapidly. And by the time demand's at 120 a day and I only have 100, and there's nothing I can do to make more apples or anybody else can do to make more apples. Bitcoin and block space are the only two things in the world where the supply is fixed like that, that I know of.
Yep.
And so, and I gave you a stat early in this conversation that for the last 2.5 years, the block space has been completely full. The only thing is but a lot of the transactions within there haven't been things that required urgency. Like, for instance, if I want to go do a UTXO consolidation right now, I don't really care if that happens today or 4 days from now.
Right.
Like I said, it's not my thing, but if I was trying to mint something, it depends on what I was minting, but I might not care if it was, today or next week. I might just say, hey, I have a certain fee I'm willing to pay to do this. If on the other hand, though, I was trying to buy a house from you, Will, like, and we were going to do that transaction in Bitcoin and tomorrow is the closing date. Well, that's a transaction with urgency, right?
Yep.
Like, you have to know that you got the money tomorrow. So I'm going to pay whatever it takes
200 sats
tomorrow for that to happen.
Yeah.
So what I'm getting at is the more that Bitcoin transactions reflect true economic activity, the more those fees are going to go up. The larger percentage of that is true economic activity, it will drive that urgency up and it will drive the fees up.
Yeah, I'm curious. We were talking about the 2.5 years or so of the blocks being completely full. There was a weekend, and you even mentioned it earlier in the conversation. There was a weekend where there were no transactions on Bitcoin, roughly. Yeah. And I feel like there's also a potential here in the future where the store of value narrative can get so strong where people do believe that this is an asset that you should buy and hold, right, to a large degree, including the countries. And so in that scenario, we might not have a high velocity token, right, in Bitcoin, meaning that there's not a whole lot of transactions happening. So let's assume that that's what happens, right, in that case, what would be the incentive for countries or any miner or any institution to participate in mining if like the store of value narrative is a strong one where it's actually true, where there's no transactions roughly, right, on average?
Well, I'll use Israel as an example again. So if I'm Israel, I'm going to continually mine. Even if the world loves me and everybody's friendly to me,
sure, I'm
always going to continue to mine because it preserves my economic sovereignty. Because in the span of one day, my access and acceptance to the rest of the world could shut down very quickly. And if I have, and also I may be, I don't mean this to scare people. I say some of these things because they're all preventable. But like if you're the United States, I'll be an extreme example. You have, and let's say the U.S. has 1 million Bitcoin, but it controls none of the hash power.
Right.
It's still, even if it wants to take loans against that money, if it wants to move it from wallet A to wallet B, it still has to have access,
sure,
to the network. So I think there will always be people motivated to mine. As long as Bitcoin has value, then there will always be people motivated to mine, so that their sovereignty, whether it's personal sovereignty, sure, or nation state sovereignty, is preserved.
Yeah, the cost of sovereignty is there regardless of whether or not the incentive is there to mine Bitcoin? So in that scenario, you're saying that countries, Israel, the United States, they would continue mining Bitcoin outside of the fact that it is not necessarily profitable to mine Bitcoin because it upholds the sovereignty. It allows them to make transactions because they do control the hash power of the network and therefore can provide the transactions that they need to make for whatever reason that they're using Bitcoin. So I guess but that means that they're operating under that condition where it's not necessarily profitable. So I guess it would be kind of I don't know. I guess it would be amiss to kind of like talk about like what was happening with ordinals and runes, with the fact that there were a ton of transactions for 2 years, and then all of a sudden, it sort of cools off, and then all of a sudden there's no transactions on Bitcoin. It's like, what the hell? So I guess part of the ordinals ecosystem, there's a token that is being mined alongside with Bitcoin, that the underlying token that is tied to the block data of Bitcoin itself is also being sent to the miners as sort of like a second subsidy. And that is a thing that sort of manifested from the whole ordinals kind of craze. And what resulted in this like crazy ordinal situation was that now we're leveraging block data itself to generate tokens that can now be sent to miners, which is actively happening right now. And so my question to you is like, what is your take on, having other parts of the Bitcoin ecosystem contribute to, this potential scenario where store of value doesn't necessarily make sense for people to mine Bitcoin outside of what you're saying, outside of the fact that it makes sense to mine Bitcoin because it preserves sovereignty?
Yeah, it's a complex question. I guess the first way I'll answer it is I believe ultimately that the economic need of transactions will overwhelm all other uses of the block space, whether that's people trying to do things like ordinals or ruins or digital IDs or, these sorts of things that I think that I'll just go back to the 200 million transactions serving 8 billion people in 330 million countries annually. That math just kind of breaks down. So I think that ultimately it becomes very difficult. There is no doubt that what happened with all of the movements you talked about in 2023 and 2024, I'd say especially in that period we discussed, which was that maybe very end of 2023 up, through the halving. There were probably many, many mining companies that would have failed had that not happened.
Right. Interesting.
Now, you could argue whether that's good or bad, by the way. That did it save poorly run organizations from, and give them, we've been better off with them not there. But I hate to say I think that's bad karma to kind of wish for that sort of thing. So I would say it was very, very financially beneficial in those windows for that mining ecosystem. And it gave them some cushion, because the reality was post-halving, this goes back to the thing Ayman asked about, the period of May and June, July, boy, that was really tough. Because, basically, the subsidy halved, right? We didn't get further pop in the Bitcoin price.
Right. Correct.
Until the fall. and it was dark days. And I think what it did is it gave enough cushion for the mining industry as a whole, because there were no notable failures, right? We didn't have anybody go out. None of the public companies or more known companies went out of business.
Right.
It got them to November, and then we got that spike in the price in November, which kind of got us back in the neighborhood of what we were making early in the year.
Right.
And, now we're in a funny position, by the way, though. Like, global hash rate has continued to increase. The fees are bone dry right now. They're very low.
Yep.
And now with the retracement back into that $80,000 range on the price, it puts a lot of pressure on organizations. I think if we see that sustained for several months, without the fee market responding, or without the price, well, if the price stays down and the fee market doesn't respond, by the summer you'll see. I mean, I don't want to predict anybody specific failing, but you probably see some companies really start to struggle.
Yeah. We're definitely aligned, and that's why I wanted to bring that up, because we're we happen to contribute to kind of like the ordinals ecosystem, just because we thought it's a good idea to have a fee market for Bitcoin. So we thought it was like pretty good idea to have like this whole functioning ecosystem. But the underlying result was there's a development where there are these fungible tokens that are associated to block data. Now, one of them being sent to the miners. As Bitcoin gets mined, the Coinbase transaction, the Coinbase is being used to direct these new fungible tokens to the miners as a way to kind of, sustain this whole mining system, because it is the Meta protocol itself is dependent on the security of Bitcoin. It's dependent on producing more blocks continuously into the future, well past 2140. And I wish we could, go deeper into this. And I know that, we're sort of over time, and I hate to kind of like overstep your time boundaries, but it would be cool to kind of have a conversation of this, probably offline, and then maybe have you come back to go deeper into this conversation. Sure. Because I think it is interesting. I think you'd find it interesting that there is like a new kind of subsidy happening with Bitcoin. But in the interest of time, I this would be like another 2-hour conversation.
Most likely.
Yeah. So Bob,
sure. Well, I'm happy to come back sometime, and we can dive deeper into some of these crevices.
Yeah, for sure. Bob, I guess final takeaways. I absolutely appreciate your perspective on things. It is definitely shined a light on kind of like how Bitcoin could manifest in a scenario where I didn't really think about, like in the long term, right? Where countries and and these institutions like banks are the ones really taking control of the network, and to a certain extent. It does sort of allow us to kind of think through different scenarios to prepare for, as you guys are doing. I guess final takeaways, Bob, anything that you want the community to be aware of, any new things that you are a part of that you want everyone to know about?
I would just say, the more knowledgeable people are about this stuff, the more that we can prevent it from going down a path. I don't see Bitcoin failing. But what I do see is the possibility of it kind of morphing into something that is different from what all of us want it to be, or that attracted us.
Right.
And it's only through education and participation that we preserve that. Because there's this phrase, I'm sure you've heard it, Bitcoin is for anybody, or Bitcoin is for everybody. Well, that includes the CIA, and it includes Wells Fargo, and it includes North Korea. It includes all kinds of people that you may not like.
Yep.
But we can't stop them from participating. And in fact, part of what I'm trying to illustrate is they actually have a lot of motivation to participate.
Yep.
So the only way we can kind of fight against that is to dilute their influence by participating ourselves, right? And in recruiting more. So, that's my main message is to do that. Because I think there are a lot of passive Bitcoiners that take the approach that, well, I'll just buy Bitcoin and I'll sit and hodl. Like we almost have that as a strategy, right?
Yep.
To hodl. But I don't think hodl means don't participate. And I think people miss that. Like it's not a passive action that we are. I use again, Jason. We are the defense and security of the network.
Yep.
And it's not somebody else's job. It's your job. It's my job, right? And so, and you can participate in different ways. You can be a miner. You can be an educator. Mm-hmm. You can be a developer. You can just be an evangelist. There's different ways to do it, but you got to do something. Yep. Don't just sit there.
Totally agree. You definitely encouraged me to look into BitAxe. I'm very interested in running that thing and
it's pretty cool.
Partaking.
Yeah.
And totally agree with your assessment. If you're into Bitcoin, you understand the value proposition that is being had here with the Bitcoin network. It is important to partake and participate, right? Whether it's like you're saying a developer or just a miner or a node validator, whatever it is, be part of the system. So, Bob, I want to thank you for coming on. And sorry we went over your time here. I know you're super busy, and I want to appreciate it. All the links will be in the description for everybody. And again, Bob, thank you so much for joining us, and we will catch everybody in the next podcast.
Thank you.